In the history of Canada, there has never been this much debt. Most individuals have financed their lifestyle with incredible levels of debt as they consume more and more. Big mistake. With rising interest rates becoming more apparent in Canada and the US, there will be no stopping the destructive effect that we will witness. You came here for the truth, so let me unveil that for you. Today, I have an absolutely jam-packed episode talking exclusively about Canada. Let's begin. For every $1 that Canadians make, they now have $1.67 in debt. What you are looking at here is the income to debt ratio. No matter where you live in the world, you need to pay attention to this very important economic indicator. So keep your eyes peeled for that. On average, Canadians owed $1.67 in credit market debt, mortgages, loans, and consumer credit for every dollar of disposable income. Think about this. Right now, at this time, we have mortgages, secondary mortgages, home equity line of credits, credit card, student loans, auto loans, and the list goes on. All near or at record highs. All of this is possible because number one, it's financed, and number two, it's financed with incredibly low interest rates. And should that change, should that policy change of low interest rates, we are going to see a major crisis. Think about it. We have never been in this level of debt before. And not even the nation, not even the cities or states or provinces, wherever you look, we are seeing the average individual pushed to the edge. But it's all possible again, because interest rates are this low. That's going to have to change. And when it does, people, the average person, the middle class, is going to feel it. All right, now look at this. Not every record is worth celebrating. This information comes from the OECD, showing you that Canadian households are among the most indebted in the world. In fact, Canada tops the list. So think about that for a moment here as I go through these next charts. To begin with this though, with the global economy showing its most even expansion since the financial crisis, debt levels and credit quality are among the risks that could trigger a downturn. Consumer debt tops 100% of GDP in Canada. So I'll show you the charts that correspond to this. There are two, but essentially have the same information. This right here, credit to households. You can see how they split this up. Advanced economies, emerging Asia. And look at this. Canada tops the list. Congratulations. What I want to note is that not all of these are Western countries. Not all of these are necessarily what you would expect. But they are and have within them major economies. But what I can tell you here is that it's not necessarily that wealth is debt and debt is wealth. Okay, there are some individuals out there who are able to utilize debt to make a fortune, and that's fine. But I'm talking about the average middle class, the average people out there who go to work, they're 9 to 5, they take that money, they use the minimum as possible, and they buy big ticket items, whether that is a car, a house, a vacation home. They buy, go on expensive vacations and everything else. All of this is being financed to the maximum. They push themselves to the edge. Some of them push themselves over the edge. But that's the issue that we have today. Again, same chart. You can see that for yourself. Canada at the top or bottom, depending on how you want to look at it. And have no fear. This is all going to be a very big issue in the near future. Directly from the OECD website, household debt, total percentage of net disposable income. All right. Canada in this case is not at the top of the list. However, Denmark is. And what's interesting about Denmark is also interesting with the Netherlands, Norway, Switzerland, and a few others within this list. All right. What is it? Negative interest rates. These countries are in the negative, or they are near record lows at this time. And this allows these countries to completely distort the value of their currency. That's what they've been doing, and it has been a good result if they're trying to devalue their currency. That's no doubt about that. As time goes on, the average individual sees their options. They're earning income. What do they do with it? Do they pay down their debt? Do they, go on a vacation? Do they buy that vacation home? What is it? What will they do? Well, think about it for a moment here. Average people, they see a savings account, 1%, 0.5%, maybe 1.5%. Maybe if they're lucky, they found something for 2%. That's right, 2 whole percent guaranteed. And they think, what's the point? So they spend it, or they will invest it in ETFs, or maybe try to get into some hedge funds if they have more money. Doesn't matter. All we know is that they are spending more, saving less, and using the maximum amount of debt that they possibly can. This is not a good thing. This is a recipe for disaster. Total Canadian loans secured against residential property. This is such a bad idea, and I don't need to be here telling you this, but yet so many people do it. Why in the world would you be putting equity into this home? You're paying in. You don't want to pay a mortgage off over 30 years. You want to pay that down as fast as you possibly can. So you pay. But something happens. Maybe you're thinking, I would like to get this, typical sedan, but the sports car, well, that seems much better. That luxury vehicle, I think that's a good option. Let's take out a loan. Home equity line of credits are absolutely off the charts. Nobody in Canada right now is realizing what's happening. The average individual, if you're not in Canada, if you're not in areas like Toronto, Vancouver, you don't know what's happening right now, because the average person, you're crazy if you don't do it, because sentiment is that housing is always going to go up. Just give it time. It might be lagging behind right now, but that's because of this issue, that's because of that issue. Don't worry. If interest rates creep up, there's going to be reason to worry. And many individuals will say, well, they're not increasing interest rates. It's just not going to happen. Well, this is the reason I'm doing this video today. Take a look at this. Almost half of Canadian households don't feel financially prepared for further interest rate increases. What interest rate increases? They barely have risen. Barely. They've notched up a few times. But on a historic level, they are incredibly, incredibly low. You could see the chart. It would look something like this, where interest rates have come basically all the way to the bottom and then slowly but surely notching their way upward. Still, however, near historic lows. Should that change, we are going to see a major catastrophe. There's no other way to put it. Debt is all heavily reliant on what interest rates are. You change that, you change the scenario. 40% of respondents said, this is a poll that they did, they fear ending up in financial trouble if rates go up much higher. 1 in 3 already feeling the impact of higher rates. How is that possible? It's so low right now. If you look at mortgage rates, in Canada, they're even cheaper than in the US, and that is historically quite low. It's not as low as some areas like perhaps Denmark, but it's still historically, for Canada, it's very low. For the US, these are still very low. Now, 42% of respondents said that they don't think that they can cover basic expenses over the next year without going deeper into more debt. How is this possible? This is ridiculous. When I read this type of information, they should be able to save right now. They should be able to put that away and pay down their debt. It is so cheap at this time. So cheap that they should be paying it down. I don't look at it like you should borrow more. I think you should pay it down at this time. It is a good opportunity to get rid of it while there's not too much there. Because in the near future, you're going to see what a lot of debt really is. The same number said that they are within, can you believe this, $200 of not being able to cover their monthly expenses. $200. Think about the repercussions of a large percentage of people not being able to pay back their debt. We're not talking about 1% or 2% or 5% or those individuals who struggle to make ends meet. We're talking about the middle class. Big issues are coming this way. And the average person in the real estate industry, forget it. They're not going to look into that. They're not going to even acknowledge that. No. Housing prices will continue to rise. If you talk to people in the financial industry, they will consider you completely out of your mind if you suggest that something is going on, something's a little fishy, things are looking down. You talk to the average individual, they'll put their fingers in their ears and they will run away as fast as they can. That's the situation that I am experiencing currently in Toronto. I'm sure it's the same thing in many cities across the world, however. This article here, Canada lost 88,000 jobs in January. The second sentence is actually a comedy that they have put out here. This is the Financial Post. It said, here's why you shouldn't read too much into it. Okay, so we had a little rough patch, but don't worry about it because everything's okay. Unemployment is still pretty low and the economy is doing well. And we have this to think about and that to think about. Everything's all good. Don't worry. It's all downhill from here. Well, I would say it's all downhill, but that's sort of the trend line. That's not the ease factor, okay? What we can see here is that the economy is not doing well. And we know that. It's all being financed. Everything is being financed. And we're going to see how bad that really is, how stupid of an idea that is. Borrowers buying homes with bigger and bigger mortgages, specialist lenders taking business from banks by offering more aggressive loan terms, analysts claiming that there's nothing to worry about. Sound familiar? No, this is not me writing this. This is not the Money GPS. This is an article that I found here. And it says, sound familiar? The real estate market in Canada is starting to share some similarities with the US before its subprime-fueled housing bubble burst. For one thing, mortgage debt in Canada is close to 70% of the GDP, not far from the peak of the US when it all went wrong. You could see that for yourself right here. Basically, where it is right now, essentially practically at the same level here. Now the US deleveraged, okay? Not because they wanted to, because they went bankrupt and because they had to, unload all of those assets that they purchased. In Canada, however, everything is fine and it's all rainbows and it's all flowers and everything is going to be wonderful for the foreseeable future. Nothing to worry about, nothing to see here, folks. Consolidated Canadian government finance statistics. Very quickly, federal government expenses bring the net operating balance here, looking at how much debt Canada really has. I'm not going to cover it all, but essentially, I would just say when you look at this, you can read the first page if you're interested. There's too much debt. There is a maximum level that is being experienced right now at this time on a federal level, on a provincial level, and you can see that the provinces can't pay, the cities can't pay, they need more money from the government. They're always begging, say, federal government, give me more money, let us raise taxes. They're always putting in people who will raise taxes. They tell you they'll lower them. They apply something and actually it increases taxes and it only makes it worse. Does that sound familiar? economic barometer. Confidence below year-ago levels doesn't bode well for GDP. Okay? I'm not going to get into this today, just wanted to show it to you. There is no way that there is any confidence. There is only ignorance. And you cannot mix up the two. And that's what I see a lot of times. And that's the failure. It's not confidence if you're ignorant. All right, I'll leave it with that. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it supports the channel. I do appreciate that very much. And this channel is growing right now, and it's all thanks to your support. So I really do appreciate that. If you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. Now, you can flip through these books. All you have to do is go to the link in the description of this video. You will see the link to Amazon. Bring you over there. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.